From New York to our Bloomberg television and radio audiences worldwide, welcome to Balance of Power. This is where the world of politics meets the world of business. We're going to start today with the markets and Abigail Doolittle, and we have, it looks like a nice rally going, Abigail, but I guess my question is, do we believe it?
That's probably the question on the minds of many traders and investors out there, because of course we've had this move up, down, this week in particular. We had the big rally on Monday, then yesterday we had a late day sell-off. Now today we have this rally to the upside. One thing that is happening, we are breaking out to the upside of that range we've been talking about. So that is a feather in the cap of the bulls. The fact that it's not coming on any news, though, speaks to the idea that there's just a propensity to buy out there. That FOMO that we've been talking about, markets being supported by stimulus, especially from the Federal Reserve. Important on today's rally, though, David, there is a cyclical tilt to it. We have some of those sectors, those important economic sectors, such as the financials and also the materials up top. So that's bullish. And the fact that you have bonds selling off, that's also bullish. So today we do certainly have those bulls out. One stock that's not participating, though, Royal Caribbean, they put up, as you would expect, a very bad quarter. Interesting, Target put up a very good quarter. Those shares are actually trading lower, though, and that, David, has to do with uncertainty around the consumer. They put up a good quarter. There are some concerns, of course, about margins, and will that eat into the strong sales? But will we see the consumer start to move back toward discretionary spending, or is it going to be all about the staples, David?
Yeah, it's funny. Everybody you talk to, we talked to Brian Moynihan from Bank of America yesterday. That's exactly what he said. It's all about the consumer. At the same time, you're a real student of the markets, Abigail. Tell me how I can tell the difference between a real bull market as opposed to a bear market rally.
Lots of signs around that, David, and that's something that certainly has been on my mind. So right now it's probably too early to say that this is a real bull market, for the very reason that if you were to go back to the time period of 1929 to 1932, the initial fall back then was a decline of 44%, followed by a 46% rally, and then what ultimately turned into an 87% decline. Let's hope that does not happen. But right now in the S&P 500 off the March 23rd low, we're up about 40% or so. So we have not quite eclipsed that 1929, 1930 rally that, again, then led to pretty dark days. Again, let's not hope that that happens. But what you would want to see to think that that is not going to happen is the sort of sector composition that we do have today: energy, industrials, financials, and materials up top, and not just those stay-at-home stocks. Because if it's the stay-at-home stocks that continue to lead, that may suggest that there's going to be more staying at home and not the reopening that everybody is hoping for, David.
Abigail, thank you so very much. That's Abigail Doolittle reporting on the markets. Well, some already pretty hot rhetoric got even hotter yesterday when President Trump said that the Chinese incompetence had led to what he called was mass worldwide killing. He's referring to the coronavirus, of course. And the question is, what does that really do to U.S.-China relations? And so we welcome now a true China authority. He's George Magnus. He is an associate at the China Center at Oxford University. So, George, thanks so much for being with us. Give us a sense. You've followed this over the years. Is just this more of the same, or is there something deeper and darker going on here right now with the way China and the United States are talking to one another?
It's pretty deep and it's pretty dark, David. You know, it's obviously, as I'm sure everybody is aware. I mean, I think the temperature of Sino-U.S. relations has been getting, you know, I don't know whether we should say it's going into the deep freeze or it's boiling hot, but I mean, either way, I mean, obviously things have been getting progressively worse during the course of this year. I mean, if you just cast your mind back, it wasn't that long ago in January that President Trump and President Xi Jinping agreed to a truce in the trade war. Now, you know, that may not have lasted very long under the best of circumstances, but anyway, at that point, we were still in a kind of a frosty, you know, environment, but one in which, you know, basically business was still possible and getting done. But ever since then, really, I mean, it's been downhill. And of course, with the presidential election coming up at the end of this year, it's, you know, it's not one-sided, obviously, deterioration. I mean, it's as bad on the Chinese side as it is on the U.S. side. But I think both sides are basically playing pretty tough game at the moment.
And George, what is the situation from President Xi's point of view? We saw those numbers that come out last week indicating that industrial production had come back, oil consumption has come back in China, but maybe not the consumer. Retail sales were disappointing. What does it tell us, if anything, about the resilience of the Chinese consumer in this rebound?
Yeah, that's a good question because actually in some respects, China offers us a little bit of a window on our own world about 6 to 10 weeks down the track because they just happen to be ahead of us in terms of where they are in this evolution of the pandemic. So there's a dichotomy in China between production and demand. So it certainly looks like it's been a lot easier for the Chinese government and the authorities to basically ramp up production, to get electricity production and coal mining and steel production and anything that can produce basically is now running back up at almost where it was or even slightly above where it was before the Chinese New Year in January. But the demand side of the economy, the consumer side, is still pretty disappointing. I mean, China is starting to normalize, but it's not normal. And part of the problem is huge unemployment. I mean, the officially registered unemployment rate in cities is 6%, which is about 27 million people. But that's widely regarded as being a chronic underestimate, and it certainly excludes about 56 million migrant workers who have not been able to return from their countryside to their jobs in cities. So basically, you should think about Chinese unemployment somewhere between 15-20%, basically. So that's a big drag on the consumer. Wages and salaries have been knocked back, partly as a consequence, partly because of weak demand in the economy. And of course, Chinese consumer behavior is not really what it used to be. So, people are not going to cinemas, restaurants, shops. The footfall is not like it used to be. I mean, one imagines that over time these things will sort themselves out if and when we ever have vaccines and as the coronavirus problem becomes more of a nuisance rather than a sort of a daily threat. But for the time being, there is this dichotomy. And of course, if companies are producing a lot of stuff and consumers aren't buying, then you've got an inventory problem which is piling up for some time in the fall.
Well, and George, as you look at the state of the Chinese economy right now, what does that tell us, if anything, about President Xi's ability to deliver on that trade agreement that you mentioned that we thought we were going to get done in January? President Trump still isn't walking away from that. Does President Xi have the wherewithal to deliver on buying the things to the United States he promised?
Yeah, I mean, I think we have to kind of pretty much accept that the terms of that agreement just cannot be fulfilled. I mean, in the first place, there have been reports, I think, I've seen about China sort of increasing its purchases of some U.S. agricultural produce. But basically, if you look at some of the big promises that were made in manufacturing, in agriculture, and in energy, there's just no way that China is going to be able to import this year anything close to the $190 billion worth of additional products that were part of that Phase 1 trade deal. And I don't think it's churlishness on the Chinese side. It's just the economy, obviously, as we know, went through kind of a terrible period during February and March. So fundamental demand in China is weak. It is starting to recover a little bit, but it's, as I said, it's quite slow. And so, Chinese imports, generally speaking, not just from the United States but elsewhere, have been really, really soft. So I don't really know. I mean, at some point, one imagines that the two sides will have to decide what they want to do about the Phase 1 trade deal, either just to basically, call it off or renegotiate it or try something new. But for the moment, I guess it's just not top of anybody's particular agenda.
And George, just to wrap this up briefly, it's not just the economic side, it's also the geopolitical side. We had Secretary Mike Pompeo congratulate the president, as he called her, of Taiwan, and China reacted virulently to it. That is a really sore subject for China. Do you think that was inadvertent on the Secretary of State's part?
I'm tempted to think not, David. I mean, in the today's climate of tit for tat and kind of nationalist, to and fro, I think that any overture. I mean, the White House and the State Department certainly understand well the sensitivity of Taiwan, so from a Chinese point of view. And so, if they are going to make, or if they have made, overtures or pleasant noises, so to speak, to the president of Taiwan, or certainly they were behind a move to try to bring Taiwan into the to observer status at the World Health Organization recently. I mean, I think they know that this is calculated to cause friction, much as the Chinese also know how to cause friction for the United States. But I mean, that is, I think, is a sorry state of where we are at the moment, is that the tenor of relations is so low, really, and trust relations have kind of evaporated so much that there is this kind of mutual teasing that's going on, and one imagines and hopes that at some point, the grown-ups will come into the room and try and sort this out.
Yeah, one hopes. George, it's really always a treat to talk to you. That's George Magnus of the China Center at Oxford University. Coming up here, we're going to talk about a presidential threat against the state of Michigan over absentee voting. Rick Davis, our political contributor, will join us to take us through that. This is Balance of Power on Bloomberg Television and on radio. Welcome back to Balance of Power on Bloomberg Television and Radio. I'm David Weston. It is time now for First Word News. And for that, we go to Mark Crumpton.
David, thank you. President Trump says he may schedule a meeting of the Group of Seven Nations to take place at Camp David after having canceled the in-person gathering due to the coronavirus pandemic. The president tweeted that he's considering the move, quote, now that our country is transitioning back to greatness, end quote. The event, originally scheduled for June, was set to take place at Camp David, but in March, the U.S. said it would instead be held by video conference because of the coronavirus outbreak. The Trump campaign reportedly is recruiting doctors to publicly back the president. According to the Associated Press, these doctors would say that the economy needs to be revived as quickly as possible without waiting to meet safety benchmarks. The campaign confirms it's signing up doctors, is not saying when the initiative would begin. The European Union is signaling that it won't punish member countries for breaking the bloc's deficit rules to tackle the coronavirus, but it may link their access to recovery funds on how well the countries follow advice on how to manage their budgets. Virtually every country has broken the deficit limit of 3% of GDP, and they have spent money to keep healthcare systems, businesses, and jobs alive. Prime Minister Boris Johnson says the UK will have a track and trace system in place by June 1st, capable of dealing with 10,000 new coronavirus infections a day. The Prime Minister has previously said that a system of tracing infections is essential to lifting the UK's lockdown. Answering questions in Parliament today, Johnson said the government will hire thousands of people to help with the effort. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Well, President Trump is on the warpath, and this time it's about absentee voting, threatening in a tweet this morning to cut off coronavirus aid from the state of Michigan because the Secretary of State there mailed out absentee ballots to all 7.7 million residents. Welcome now our Bloomberg political contributor. He is Rick Davis from Stone Court Capital. Rick, great to have you back. It's good to talk with you. So it looks like there's a real brouhaha here because we have Nancy Pelosi, the Speaker of the House, saying she wants to put into law that we're going to vote by, everybody's going to vote by mail come November, and the president really will have none of it.
Yeah, this battle's been brewing for some time. You saw it rise up during the debate over the CARES Act. Congress put in $400 million of election support, knowing that in some states they wouldn't have restrictions lifted in time for the elections, and so they were finding ways of supporting that. And so I think the president picking a fight with a statewide Secretary of State who controls the election process in Michigan is pretty unusual, right? I mean, you typically try to pick your fights carefully if you're the President of the United States, but he tweeted out a pretty strong attack. that was both a personal political attack, but also inconsistent with what she's really doing. I mean, they allow you to have absentee ballots in Michigan, but what Jocelyn Benson was doing was saying, we're going to allow you to apply for them, and so she's sending out an application for those ballots. And so maybe Trump wasn't well informed. Maybe he just wants to pick this fight. But you see this happening in Michigan, in Nevada, a similar thing with the president. There's an effort in Texas to limit the ability to vote by mail in the courts by Republicans. So this is going to be preliminary to the general election in November.
Rick, as far as you can tell, do you think this is because the president really thinks this appeals to his base, that people, for example, in the state of Michigan, which he needs desperately in this next election, will side with him on this issue? Or is it really a question of who's going to end up voting?
Well, there's always been a stream of Republicans, usually very conservative Republicans, who don't trust the government. And so they show up on Election Day. They're not the ones in states that do have early voting or absentee voting who participate. They never want to turn their ballot over to the Postal Service. And so there is a strain within the Republican Party who just don't trust government apparatus. And, of course, we know Donald Trump appeals to those voters. There's also been a storyline, and it's pretty much just a storyline, not supported by fact, that you empower more voters who are Democratic voters if you allow vote by mail than otherwise. All the states that have vote by mail have been a good test case for that, and there's no real clear indication that that's the case. So it may be that he's acting to rile up that right-wing base of his. It may be that he actually does fear that it allows broader participation and potentially more Democratic votes. And in states like Michigan and Nevada, those are going to be hard-fought states. They'll be targeted states in the general election, and he probably cares about trying to control the ballots as much as he can.
Rick, finally, give us some sense of where the race is overall, and very specifically on the question of Joe Biden and his pick of a vice presidential candidate. A lot of talk about that right now. You have some experience with picking a candidate that gets a lot of attention. Is there somebody out there that Joe Biden could pick that could really, really goose his campaign?
Sure. I mean, as you and I have spoken in the past, when you pick a vice president, if you're ahead in the polls, you usually pick one that can help you govern. And if you're behind in the polls, you want to pick one that can help you win. And I think Biden has sort of the dual problem where even though he's ahead in the national polls and ahead in almost every targeted states, he's not ahead enough to have the confidence that he can pick just someone who can govern and doesn't need to add anything to the ballot. And so I suspect that the Biden campaign will be clearly trying to find somebody who can help them win in those targeted states. We know that the battleground on those states will be fought in the suburbs over women's votes. And so he's already declared that he's going to pick a woman, and now the question is which woman is going to matter the most. Typically, campaigns have already started that process of diligence where they get a list of a dozen or so candidates, and they start testing them with polling in states with the key constituencies and see who does well. That usually then results in a shorter ballot of candidates. And so if they can narrow down a larger list to, just a half a dozen or less over the course of the next couple months, that'll be their primary objective. And that is a more scientific approach to the culling process, and then a lot of it will be who's the best able to govern, who's got the best chemistry with the candidate, who's got the best ability to contrast with Trump and the current administration. And they'll get to all that over the course of this summer.
Right. Rick, always great to talk to you. Thank you so much. That's Rick Davis. He is from Stone Court Capital. Coming up here, we're going to talk about the airlines. There may be some green shoots. That's going to cover our stock of the hour coming up next on Balance of Power on Bloomberg Television and on radio.
We think in June there's going to be more demand for flying from May. We're seeing that in some of our forward bookings. Again, we're very cautious, but we expect to fly our June schedule probably between 70 to 75% of what we normally fly. Whereas in May we were flying 85 to 90% down on what we would normally fly.
That was JetBlue CEO Robin Hayes speaking earlier today to Bloomberg Television. We're going to stick with airlines now because just like JetBlue, other airlines are seeing at least some hope, including Delta, which is our stock of the hour, and we turn to Abigail Doolittle.
Well, David, there are certainly signs that people are taking to the skies again. Maybe not the way that we used to fly, but certainly well off the bottoms in April, similar to what CEO of JetBlue, Robin Hayes, was just saying, and that those trends are going to continue. So Delta really adding on to that sentiment on the day earlier with an interview with one of our competitors, quite frankly. But you can see that these airlines are doing extremely well over the last couple of weeks. On some weeks, gaining more than 20%. So again, that optimism that people are going to take to the sky, both business and leisure. And also, we do, of course, have that bailout, which is helping these airlines to some degree, or to even a big degree, saving the industry. American receiving the most pledged money, $5.8 billion. Delta, $5.3 billion. JetBlue, funny enough, the smallest amount of that money, just about $1 billion. But relative to Delta, they are saying that they are increasing flights for June by 200. That's up from 100 just 2 days ago. And they're also saying that passengers are up 150% from April levels. July could be much better. So again, just the overall sense that people will be back in the skies soon, David.
Exactly, and Abigail, it goes back to what we talked about earlier. Will the consumer come back, whether it's to retail or whether it's to the airlines? And we don't know. They've got a long way yet to come. They're still well off where they were, but there's some indication they're starting to come back already in May and into June.
There are these signs that folks are going back out into the world. And I have read that there are two ways that pandemics end historically. One, if there's a vaccine. Two, if people simply become less fearful. They might still be careful, but they're less fearful. So if that happens, you could see folks take back to the air and travel. One area, though, of the airline industry overall, though, that's still being hit are the airline makers, of course, David. Because that demand is weak, they are having to preserve cash. They're not making planes. Let's see whether or not that changes. Both Boeing and Airbus down 60% this year. Really pretty incredible. But those green shoots we are starting to see for the airline industry overall, David.
Okay, Abigail, thank you so very much. That's Abigail Doolittle. Coming up here next, the plight of the cities in this pandemic. We're going to talk with the head of the National League of Cities. He is Clarence Anthony. That's on Balance of Power on Bloomberg Television and on radio. Welcome back to Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. President Trump is threatening to withhold funding for Michigan, a crucial 2020 swing state, and Nevada unless their leaders refrain from facilitating absentee voting. The president's tweets come as many states are considering expanding access to remote voting this year. Dozens of voters and poll workers were infected with COVID-19 after Republicans in Wisconsin refused to expand absentee voting for that state's April 7th primary. India will allow airlines to resume domestic flights next week as Prime Minister Narendra Modi tries to gradually restart economic activity. But coronavirus infections in the nation are climbing at the fastest pace in Asia. India has more than 106,000 confirmed cases. More than 3,300 people have died. An Israeli court has ordered Prime Minister Benjamin Netanyahu to appear for the opening of his criminal trial in Jerusalem on Sunday. The Prime Minister's attorneys had asked the court for an exemption. Mr. Netanyahu was indicted on charges of fraud, breach of trust, and accepting bribes last year. He has denied any wrongdoing. His trial was supposed to begin last month, but was delayed due to the coronavirus pandemic. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. The debate continues on Capitol Hill about whether to give aid to state and local governments or how much aid to give. But in the meantime, cities are really losing revenue every single day, particularly because of the unemployment situation. There's a study now out from the National League of Cities estimating that over the next 3 years, the cities across the country will lose $360 billion from that source alone. We welcome now the CEO of NLC. He is Clarence Anthony. So welcome so much for joining us. I appreciate you being here. So give us a sense of what this survey really showed. That's a lot of money, $360 billion.
Yeah, David, thank you so much for having me on the air with you today to talk about this most important issue. What our research shows is that over the next 3 years, cities, towns, and villages all over America will expect a $360 billion revenue shortfall. And as we look at this year, what we are anticipating is $134 billion. So this is based upon the information that we're getting from our members and a survey that we got. And again, we go to 2020, we're looking at $117 billion, and then 2022, $110 billion. You know, these may sound like numbers, but this is really about, America getting back to normal, if whatever that is. It's about basic services. We know that we're going to have fewer police officers to respond to residents' 911 call, fewer EMS, fewer sanitation workers. So this is not just about the numbers. It's about the people that live in these cities, towns, and villages that we represent.
So, Mr. Anthony, could it be even worse? $360 billion is bad enough, goodness knows, but could it be even worse? Because this is just because of unemployment, as I understand it. There's a lot of pressure being put on the states as well. Might the states have to cut back on some of the assistance they give to cities and villages? Yeah,
these are estimates, and I think as we go further into 2020 and 2021, we anticipate that we'll get more updated numbers. But what we're seeing in states like Kentucky is approximately a 35% unemployment rate. We're estimating in Georgia a 36%. Louisiana, again, those numbers are up to 28%. So we're seeing right now the impact on the shutdown in most cities to be having a significant impact on the businesses, lack of jobs, lack of ability to provide the services that we need. And what we've been saying to Congress and the administration is, if you really want America to start back up, you need to jumpstart the economy of the cities, towns, and villages in America. And that is so important because we're seeing cities like San Antonio furloughing employees. We're seeing Charleston, West Virginia, who's showing in their budget $98.9 million budget. They're seeing a $2 million deficit thus far. So this is just a start of what we anticipate will be a long recovery for America.
And Clarence, is it distributed evenly across the country, or are some parts hit worse than others?
Yeah, I think all states are being hit in a different way. But what we're seeing is that the small and rural communities, it's starting to impact those communities now. It's the 1-2 punch. First, we're seeing the increase in the COVID pandemic numbers in those rural communities. And then we're seeing the increase in loss of jobs. It's like a 1-2 punch. These communities are not as diverse as the larger communities in America, the most big city. And when we talk about COVID, we have that picture. But we have stories in those communities that are showing us in Nebraska, Oklahoma, in other parts of our nation, and even Ohio, that these numbers are growing, and thus the impact is more significant. They're not having the ability to be able to have the access to the health care, the testing, the transportation to be able to get to the hospital and other services. So it is impacting at this point the most vulnerable populations in our nation. And we just want to make sure that our city leaders and have the tools to be able to help in this recovery mode that we are in.
Does this affect the attitude of mayors across the country toward reopening the economy? Because when you listen to President Trump at the White House, we heard Secretary of Treasury Mnuchin yesterday up on the Hill saying the main thing we need to do to get the unemployment down, to get the economy going again, is to open the economy back up. Does this lead many mayors to say, you know what, we really want to lift restrictions?
I think that what we're hearing from our mayors that are members of the National League of Cities is that they want to follow the direction of the healthcare professionals and the scientists, and what is good for one community in Colorado may not be the same thing for Georgia, based upon the data that they are receiving. And we've been hearing that over and over again. The most important thing to our leaders is that they have a healthy citizenry, and that we got to take our time, because we don't want to find ourselves going, backwards in terms of this process.
Okay, thank you so much. Really appreciate you being with us to give us that result of your study. That is Clarence Anthony. He is the CEO of the National League of Cities. Coming here next, bikes may be getting short supply. We're going to talk with the CEO of Trek Bicycle. That's coming up next on Balance of Payment on Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. During the time that John Burke has been the head of Trek Bicycle, the sales have gone up to over $1 billion, which means he's learned a fair amount about leading a large organization through good times and through bads. And he's taken those lessons and applied them more broadly to the country. And he's written a book now called The Presidential Playbook 2020 about what we could do as a country that would make us bigger and stronger. We welcome now Mr. Burke to Bloomberg. Thanks for being with us. Really appreciate it. So first of all, let me ask you about Trek Bicycle. How's business right now in the middle of this pandemic?
When the pandemic started, we thought business was going to be really challenging. And a couple weeks into the pandemic, consumers found out that the bicycle was a really simple solution to getting outside, to transportation, and to a number of other things. And so business has been booming ever since. So it's really caught us by surprise, but it's been a good one for us.
There are reports here on the East Coast that we may actually have a shortage of bicycles because everybody's trying to buy a bicycle. Is that possible? I mean, are you having any trouble getting materials and getting your manufacturing going?
There definitely is a shortage of bikes. I've been in the bike business for 37 years, and I've never seen anything like it. We've seen a surge in demand. We had hoped to have a great season, so we had a lot of product, but our warehouses are being emptied. But there's still a lot of bikes at retailers. They're just getting a little bit harder to find.
Fascinating. So there's one part of the economy that appears to be booming, and you're keeping up with it. So
Yeah.
Tell us what you have learned from leading Trek Bicycle that might have broader implications. What have you done at Trek Bicycle? How's the company changed under your leadership?
Well, the company's changed a lot over the years. My father started the business 44 years ago, and one of the big changes is we took the business internationally, and that was a great move. But I think one of the biggest things that we've done at Trek is we've created a great place to work. And I think one of the biggest things we've done at Trek is we've broken our business up into different pieces. We've got a leader for each one of the parts of the business. We make sure that we have a great leader for each one of the businesses, and that we put a real premium on having a great plan in place. And, you know, that's one of the reasons why I wrote the book about the presidential playbook is I think that in America we have people who run for the presidency who don't have a plan. And I think when you take a look at the big challenges we face, part of that is a lack of leadership, is our leaders spend a lot of time trying to get reelected, and they spend little time putting a plan in place to move the country forward.
Well, as you say, the book actually has a 16-point plan. There are 16 points in the plan, actually, that I've looked through, which is a lot. It's very detailed. As I understand it, originally you were thinking about running for president yourself. Why didn't you do that?
You know, I was really disappointed. You know, I've always loved the country, and I love the history of our country, and I was really disappointed with the performance of the government back in 2011, and I went to my son's graduation, and the great American historian David McCullough was the speaker, and at the end he looked at the graduates and he said, "Do something for your country." And I thought to myself, what could I do? And so I wrote a book called 12 Simple Solutions to Save America, and I wrote it back in 2016, and I did not save America. And I said to myself after the 2016 election, I said, if somebody competent doesn't run with a plan, that I'll just do it myself. And so I spent the last couple of years writing my plan as if I was going to run. And I seriously considered running, and at the end, I decided not to run because there were a couple people who had run presidential campaigns, and they told me I had very little chance. And I thought what I really wanted to do was educate the American people. So I decided to take the exact plan that I was going to use if I was going to run, and I put it into a book, and I really want to educate the American people. And so I put that book out. You can go to Presidential Playbook, download it for free, because I just want to educate Americans, or you can get it at Amazon.
Yeah, actually, I've done that. I've downloaded and looked through the PDF, and it is fascinating. It covers a lot of issues that we talk about often in the United States that not much gets done about. But I wonder, Mr. Burke, whether there's a real difference between running a company on the one hand and running a country on the other, because there's something called politics, and there's something called Congress when you get there, because some of the proposals you had, like a line item veto for the president, that's been around forever. A lot of people think that'd be a good idea, but boy, they haven't been able to get it done. Term limits on congressmen, a lot of talk about that, really hard to get that done. Actually being able to hire and fire federal employees, doing away with the employees' unions, paying them more money, sounds like a good idea for a company. Is there a difficulty of a businessman going to Washington because they don't know how to really pull the levers and push the buttons there?
Yeah, I think one of the things, I think that's a really good question. I think it all starts with the campaign. I think as Americans, we're treated to these campaigns where people spend billions of dollars dumbing down the American public because none of these issues are ever discussed. And that's what would have made my campaign different, is I would have talked all about my plan. I wouldn't have talked about negative advertising. I would have focused on the plan. And I don't think that the vast majority of American people have any knowledge as to these critical issues that are facing us. And I think one of the things that we're learning, especially through COVID-19, is good government matters. And I think having a plan matters. And I think if you want to take these issues on, and I have 16 of them, but if you want to take on climate control, if you want to take on high-performance government, if you want to have a better foreign policy, if you want to rebuild America through a better transportation system, I really believe it can happen. But I think you've got to go out there and you got to talk to the American public like they're adults. You got to talk about what the real issues are, and you got to ask for the order. And I don't think anybody ever does that. I think it's turned into reality TV for campaigns, and then all of a sudden when somebody's elected, they're like, what's next? And in my situation, I wrote a book, and in that book, it's a complete plan. I think what we need from a president is, especially at this time, is I think we need an activist. And I lay that out in the book, just some really great ideas on things we can do to turn this country around.
Okay, Mr. Burke, I really appreciate you being here. That is John Burke. He's the president of Trek Bicycle. That's a name we all know. He's also the author of the Presidential Playbook 2020 that we've been talking about. Thanks for being with us, Mr. Burke. In the meantime, we have some news crossing the Bloomberg right now. Chancellor Angela Merkel has said that the Lufthansa bailout deal is now close. So it looks like Germany may be bailing out Lufthansa. It's what it used to be, its national airline. Coming up on Balance of Power, we're going to talk about the 20-year auction for Treasury bonds coming up with Mike McKee, our policy and economics correspondent. That's going up next on Balance of Power on Bloomberg Television and on radio. Welcome back to Balance of Power on Bloomberg Television and Radio. I'm David Weston. Just a few minutes from now, the U.S. Treasury is going to do something it has not done in 34 years. It's going to issue some bonds that mature in 20 years. To take us through the significance of this, welcome on Michael McKee. He is, of course, our Chief Economics and Policy Correspondent. So, Mike, why is this such a big deal?
Well, in part, David, because there's nothing else going on today, so the bond market has this to focus on. But again, it hasn't traded, it hasn't auctioned, rather, since 1986. So there's a sort of uniqueness to that as well. The question is whether this is going to be well received, especially given the fact that the Treasury is issuing so many bonds over the next couple of years to pay for the deficit. Do people want them in the 20-year tenor? A lot of people say that maybe they do, because the 30-year bond, remember, was interrupted from 2001 to 2006. So there aren't really a lot of off-the-run 30s in the 20-year space right now that would have climbed down from the original 30-year issuance. And so if you're looking for that kind of duration, particularly if you're a retirement fund manager and you need a 20-year duration, you probably would be happy to have this. The question is, do enough other people want it to make it a deep and liquid market and for the Treasury to keep issuing it? The Treasury Secretary, Steven Mnuchin, said they'd like to keep issuing not only 20s, but much more at the long end, because obviously with interest rates so low and the deficit so high, they've got to pay a lot in interest costs if rates go up.
So Mike, it may, as you explained it, it may help the trading of these bonds a little bit, smooth it out a bit. At the same time, address the bigger issue about that demand for U.S. Treasuries, period, because there's just, I think it's what is it, $3 trillion this quarter, something like that they're going to have to issue. It's really extraordinary, and yet there seems to be no indication people are getting cold feet.
Yeah, it's very strange. By the book, you should expect yields to rise at this point, because we're looking at so much issuance and you'd have to pay people to take them. But no, at this point, the rest of the world wants U.S. Treasuries, and so do many Americans. Now, that may be in part because everybody's thinking they've got to save so much, but you'd expect more on that at the shorter end. You'd also expect portfolio managers to be taking up 30s, because we got a lot of people retiring. But it is an anomaly, and a lot of people think that at some point we're going to pay a price in higher yields. We just don't know where that is. So you get all these people saying, well, MMT is right. Nobody knows if MMT is right either. It's just that right now we got enough buyers.
So a little over an hour from now, we're going to get the minutes from the FOMC meeting that were about 3 weeks old. But you've got something much more current, because you're going to get to talk with Robert Kaplan, the Dallas Fed president, coming up at just about 20 minutes from right now here on Bloomberg. So give us a sense of what you really want to hear from Robert Kaplan.
Well, we want to know how the economy is faring in various districts around the country as they get ready to reopen. This is going to be a story of a lot of different states, a lot of different cities, and how they proceed through reopening and how anxious people are to get back out and spend money and resume economic activity. Will companies reopen? Will restaurants reopen? Those are the interesting questions, and I'll be interested to see what Rob has to say about the Dallas district. Yesterday, we talked with Eric Rosengren from Boston, and he said he thinks that they may be going a little quickly, even though the Boston district is one of the slowest moving at this point. He's worried this is going to be a very long, slow recovery. You can take a listen here.
I think they're very much hoping that there'll be a pickup in the second half of the year. I think in GDP terms, there will be a pickup. I also think, though, that unfortunately, the labor markets are still going to be pretty weak. So in a talk I gave today, I highlighted that by the end of the year, I expect the unemployment rate to still be in double digits. So it's probably going to be significantly down from where we are right now.
So that was the view from Boston. We'll see if the view from Texas is the same. Jay Powell sort of said the same thing yesterday, David, that Eric Rosengren said.
One last question, negative rates. BOE is interested, apparently the Fed is not.
The Fed is not, and they've made that pretty clear. And you've noticed that the markets has now priced out negative rates. Maybe they're starting to believe the Fed when they say something.
Yeah, how about that? Okay, thanks so much to Michael McKee. It's always great to have Mike with us. And once again, you want to stay tuned for about 20 minutes from right now at 1:15 Eastern Time. He's going to be talking with Dallas Fed President Rob Kaplan. Also in the second hour of Balance of Power, I'll get to talk to Tom Halverson. He's the CoBank CEO about what's going on with farmers. That does it for the television portion of Balance of Power on Bloomberg Television and Radio. I'm David Weston, and this is Bloomberg.